Only about 5% of traders know what I'm going to show you in this video. These 5% are considered the geniuses, the ones that consistently profit from the Forex market. And what is it that separates these people from someone who has not quite been profitable yet? Well, I can tell you that it can be taught and you can learn how to do this. And I know that because I personally was one of the people outside of the 5% that were consistently profitable. And I learned these skills that eventually led me down a path of profitable trading. And in today's video, I want to show you how to do the same exact thing. I want to show you the skills that separate the genius traders from the ones that are consistently losing money. I'm also going to share the analysis and complete strategy behind the pound Aussie trade you see on your screen. This was a strategy that I actually teach here on YouTube. We're going to go over it yet again with some modified rules. I'm also going to ask you to go ahead and click that like button, click the subscribe button, follow us on Instagram at The Trading Channel for more educational content about Forex, and I'll see you on the other side of the intro for today's content. Talk soon. So here on the pound Aussie, we're currently in a trade that I'm going to show you the exact analysis behind and the strategy we used in order to get involved in this trade. But first, I want to show you a trade we took using this same exact system, same exact strategy at the end of January that put us at a 5-to-1 risk reward and made over 507 pips. So here lately, at least here on the pound Aussie, this strategy has performed extremely well. We had a very similar, almost same exact situation set up on the pound Aussie this week. Now, the question isn't, Steven, how many pips did you make off this strategy? That would be a dumb way to try to teach someone. And that's what a lot of people do here on YouTube and on Instagram, where you see these flashy traders. But instead, the question is, how can you use this to better your trading? How can you use this to increase your odds of becoming profitable? And while a strategy isn't the entire puzzle, it's a huge piece to the puzzle in itself. So let's go over the strategy right now. Here on the pound Aussie, we'll take a look at the trade from the the end of January first. At the end of January, we had the pound Aussie breaking above this major level of resistance. Once we had a break and close above this level, I obviously was looking for some sort of pullback and trend continuation out of this pair. That's the way I trade. I'm looking for previous resistance levels. Structure and trend are a huge part of my trading. At this point, we had started an uptrend on the pound Aussie and broken above a previous major level of structure. Now, after that, what I looked for is an entry reason that I've went over here on YouTube a couple of times. It's called the 5-wick rejection strategy. This 5-wick rejection strategy is so simple that I can explain it to you in a few sentences right now looking at this chart. This 5-wick rejection strategy is exactly what it sounds like. It consists of 5 wicks rejecting an area in the market. So right here, if we count them, we have 1, 2, 3, 4, 5. On that 5th wick is when we decided to take an entry on the close of the candle that tested this area 5 times. We do not want to see a close below this area. We want to see a wick test it and then the candlestick close above it. With that being the case, we placed our entry with our stop loss right below this area of wicks, and the stop loss did not get hit, and instead the market pushed up, hitting our first targets quite quickly, and our second targets came off on this trade up at a previous level of resistance. Looking left, it's on the daily chart. I'm not going to zoom out right now, but looking left, this was a previous level of resistance I was paying attention to, and ended up again being over a 500 pip win. Now, earlier this week, on this pair, we had a very similar situation. Right here is an area of structure. And if you've seen a few of our videos, you know that areas of structure are a huge part of my trading and a huge part of what I want you to know helps you become profitable in the market. This understanding structure, understanding technical analysis will be a big piece of the puzzle that creates the strategy that you use. So here we have a level of structure in the market that had been tested as support and resistance 4 times very recently. When I look at structure levels, I look for 2 things. Recency, like how long ago was it tested, the sooner the better, or the most recent the better, so recency, and frequency, how many times was that level tested. So here we meet both of those criteria very well. This area was tested very recently 4 separate times as support and resistance. With that being the case, I dropped down to a 1-hour time frame, and I want you to look right here at our entry. Our level of structure existed right in this area. So because we have a level of structure in this area that was tested multiple times looking left, I asked myself, do I have an entry reason here in this level? Let's go ahead and do this again. If we put a horizontal line, let me move our profit taking tool over. If we put a horizontal line at the lowest body of this swing low, drag that down just a little to make it near perfect, and then we count how many wicks we had that tested and rejected this level, what do we have? 1, 2, 3, 4. This long wick makes 5. We have 5 wicks rejecting an area of price in the market that has been tested previously as support and resistance multiple times. That is the entire strategy for the 5-wick rejection strategy. There'll be a link in the top right hand corner of the screen for that full tutorial. That's free. It's on YouTube too. You can just click that link and head over there. It's also in the description. But in this area, obviously, before anything came technical analysis. I needed to understand what kind of trend we were in and what levels of structure I wanted to pay attention to that gave me the best likelihood of trading opportunities. Most traders think they're just going to win all the time. A lot of traders don't understand that every time you place a trade, it needs to give you a statistic advantage because your profitable trading is not going to be based on that one single trade. If you're basing your profitable trading on one single trade, then you're going to be emotionally unstable for one and probably blow your account because you're going to be risking too much on that one trade. That would be equal to gambling. You might as well go to the casino. We want this full basket of 100 trades to give us a statistic advantage that eventually equals profit. And trading in this way is a way I've found to give me that advantage. So again, looking for major levels of structure in the market based on rules that I'm going to show you right here. I can teach technical analysis in less than 5 minutes, in less than 3 minutes. I'll do it right now. Technical analysis, again, is not everything you need. Technical analysis is a small piece of a large puzzle that equals a trading strategy. We're going to go over now. As I transition into this, we went over this trade. And again, on this pound Aussie trade, I will be waiting to see if this market gets up to 1.9746 for possible targets on this trade. Right now, we're sitting at about a 2-to-1 risk reward on this trade. I want to get up there closer to a 5-to-1. Stops are moved above break even, below this level of structure. So that's what I'm waiting on the pound Aussie trade, just to get that completed and go over that. Now let's discuss what separates the 95% of traders that are constantly losing money, or even worse, losing their entire accounts, from the 5% of traders that are consistently profitable. Before we do, I don't know if you noticed this, we are now ranked number 12 best trading education channel on YouTube from a third-party source. I have nothing to do with this. This was voted on by traders just like you, and we have risen to the 12th spot in trading education based on stock and Forex, any other financial market education as well. Based on all of them, we are number 12, which is really exciting for us here at the Trading Channel. So I want to thank all of you who voted on that. Let's go ahead and jump in now. What separates the two? Well, I can tell you this. It's not technical analysis. You can know technical analysis inside and out, and that will not create a profitable trader, because technical analysis is a very small part of an entire strategy, and an entire strategy is a very small part of an entire trading plan, and your full trading plan is what will help you create a profitable trading career. I hope that everyone understands that that's watching this video. So let's go ahead and talk about this. Technical analysis I can teach in less than 3 minutes. Watch. This is literally all I use. I've created it down to the most simple form. For a trend, we are looking for 1, 2, 3 moves in the market. These 1, 2, 3 moves must consist of an impulsive move followed by at least 2 candles on the pullback, followed by an impulsive move that breaks and closes below that 2 candle pullback, the swing low of it. That's the first part of a trend. If we have a market doing this, then we are in a downtrend. If this market does this, then we are now, let me start over. If this market does this 1, 2, 3 move, heading back up right here, if this candle, these 2 candles are at least a 2 candle pullback after this impulsive move, we have a 2 candle pullback and another push up. We're not yet in an uptrend. We are in what I call a bearish rotation. So it's very likely, it's at least possible, that we're going to see this market continue higher. Once we put in one more 2 candle pullback followed by a break of resistance, we are now in an uptrend. Rewind the video, watch that 3 times. You will understand trend inside and out. We're looking for moves impulsively pushing down, followed by at least a 2 candle pullback. Can be as many candles as you want it to be, as long as it doesn't break previous resistance. It can be 7 candles, and then pushing down, breaking below support. Now we're in a downtrend. Pushing up, continuing that, we're still in a downtrend. If we create a 1, 2, 3 move going back up. We have an impulsive move here. We have 2 candle pullback here. And we have another impulsive move that breaks resistance. Then we're in a bearish rotation, or excuse me, a bullish rotation. We're starting an uptrend, possibly. Then we have another move. We're now in an uptrend, and we're doing this until the same thing happens going down. That is trend. That's technical analysis can be taught, and you can learn it in less than a day if you go through the market and practice this. Just go through historical data, practice this, you will have trend down pat for structure, which is the other part of technical analysis that I like to see traders master before they get into building a strategy. For structure, the previous level, remember that 2 candle pullback right here? This would be the 2 move of our 1, 2, 3 move, that 2 candle pullback. This is previous support. That level will be the most likely level if the market tests it for the market to continue in trend from. That's structure. As we go down, let's say we have a market that looks like this. As we go down, what we're looking for as we go down is major levels of structure support that the market has bounced from, or major levels of structure support that have been tested at least 3 times. Here we have a resistance level that was support and support in the past. Here we have a major level of support that pushed the market up. If we're pushing back down now, and we've been in an uptrend, these are going to be the counter trend levels. Now we've what? We've started a 1, 2, 3 downtrend. So we're in a downtrend now because of that, and then we're following that with another 2, 3 move. Our counter trend levels of support are these major levels that have been tested 3 times or more, and these major levels that caused huge moves in the market. Structure and trend taught in, I think I did that in less than a minute and a half. If you watch that 3 or 4 times, you'll understand trending markets and you'll understand structure. You have now mastered technical analysis. The only things you need now are price action patterns and candlestick patterns, and then you can create the entry of a strategy. Then you'll need stops and targets after that to create a full strategy. Now, even with all of that information, you may have a strategy at that point, right? And again, this 5-wick rejection strategy, it just combined all the things I showed you, right? If we look at the daily chart here, or excuse me, we're on the 4-hour for trend. On the 4-hour chart, what trend are we in? We are in a trend that goes like this. We pushed down, heavy move. We have an impulsive move up. We have a pullback. We have a break and close of that trend right here. We have a pullback. What is this? This is 1, 2, 3. We have this pullback. This will be another 2. This impulsive move that breaks resistance. That would be number 3. Right now, we're still in an uptrend. Okay, we're in an uptrend. What levels do I want to pay attention to if I'm in an uptrend? I'm going to pay attention to the latest level of resistance that was broken, because that's likely to become support. And I want to pay attention to any level that has either pushed the market around a lot or been tested 3 times or more. In this case, we come down to our previous resistance that had been support. I got nothing here, even on an hourly chart. Then we continue lower and we get into the zone I just showed you where the market's used it as resistance and support multiple times. There's the technical analysis portion of this trading strategy. After we got there, in terms of entry and stop loss, all I did was drop down to a smaller time frame and look for my specific entry, which was 5 wicks, rejecting this area of price I've now pointed out as a major level of structure. That's the entry. Once the entry was done, I have already back tested through historical data on this pair, at least, hundreds of trades to figure out the best stop and the best target. And that's what we're going to talk about now. Stops and targets are the next step of building a strategy. So I've already done that. I know the best place to put stops on this specific pair, and I know the best place to put targets. That's already done. So with that being the case, I now have a full strategy. But once you get this full strategy, let me start over because you need to understand this. Once you have the full strategy, including stops and targets, and you've taken all of that information and tested it through historical data, once you have that, you're still not done. That's not going to make you a profitable trader. This is what the 5% know that the 95% don't do, and this is the reason the 5% are consistently making money and the 95% are consistently losing. It's because this isn't the end of the road. This is the beginning. The strategy that you create then has to be tested through historical data, and you have to see if it's created a profit in the past. If it hasn't, then why would you trade it in the future? Why would it create a profit in the future if it's never done so in the past? So if it's created a profit in the past, you then have to take that information, build a risk management plan around it, which is a huge part of a trading plan. I just did a video fully explaining risk management. So I'm not going to do it in this video. It's in the top right hand corner of your screen, and a card. It's also in the description. It hasn't got many views because risk management is one of the most boring topics in the world, but that is one of the most important videos I think I've ever done for your trading. So I would suggest checking it out. Once you have risk management down, you then have to combine and optimize this strategy with other pairs. So that's the full process of actually creating a trading plan. And that, again, is what the 5% that make money put in all of this work. I'm sorry if you're someone that thought trading was going to be super simple, you were going to learn one strategy, and you would be set for the rest of your life. That's not how it goes. Trading is an incredibly, and I mean incredibly, beneficial thing for your life. It can give you freedom of time. It can give you financial freedom. It can, if you're passionate about it, it can actually create happiness in your life. It has for me, but it can do none of those things if you don't put in the work. It can also make you one of the most miserable people in the world if you don't put in the work it takes to become profitable. So that's going to do it for this video. I hope you enjoyed it. I hope it was educational. 5 wick rejection strategies in the description. Also, risk management plans in the description. Also, if you'd like to learn more about the step-by-step process to creating a profitable trading career, then we have the EAP training program linked below. We're currently running some discounts on that program. So if you'd like to get involved, click the link in the description for that. I'll post some testimonials on the screen from other traders that went through the course and found it beneficial. You also, with that course, get 3 to 5 of my personal trades each and every week. And priority email is like, you can send me any questions you have, and I personally will get back to you. I get back to everyone personally. That's why we're not always open for enrollment in the EAPs, because I like to have a personal relationship with everyone involved, so we can only allow a certain amount of members in at once so that I can personally mentor them. So if you want me as your personal mentor along your journey to becoming a profitable trader, click the link in the description labeled EAP. I'll see you there. Or if that's not something you're into at all, totally fine too. No big deal. Click the subscribe button for more free educational content like this. Click that like button, follow us on Instagram, and there will be a video somewhere beside my face that is very beneficial to your trading as well, and I think it'll really help you out. So click that, follow along.